Welcome to Kryptonite. My name is Ife, and in this video I am going to show you a profitable scalping strategy. This is going to be a 2 confirmation strategy, and I am going to show you how to identify possible invalidations to this strategy. Before I start, you should know that the content of this video is not financial advice, as I am not a financial advisor. Always backtest these strategies before implementing them in your trades. With that said, now let's jump right into this video. Right now, I am on the BTC USDT price chart, and this is the 1 hour time frame. The indicator we are going to use in this video is the Williams Alligator. You go over to this section right here where it says indicators and strategies. You click on this and search for Williams Alligator. This is the exact spelling, and the first result right here is what we are going to use in this video. You click on this. These 3 colored lines is the Williams Alligator. This basically comprises of smoothed exponential moving averages, and I am going to show you how to use this Williams Alligator for scalping. The first step right now is to go over to a lower time frame. As you all know that when you want to scalp, you do so in the lowest possible time frame, so you can be able to make more money in a short period of time. What we are going to do is to go over to a lower time frame, like the 5-minute time frame. This right here is the 5-minute time frame on the BTC USDT price chart, and you can see right here that the alligators are not really helpful with these current settings. So what I would have to do is to go over to the settings right here and configure this indicator by adjusting the different lengths of the Williams Alligator. You can see 3 sections right here: the input, the style, and the visibility. Let's go over to the inputs. What we are going to do is to change the individual length for the lips, the teeth, and the jaw. So I am going to change these 3 lengths to fit well with my strategy. The first length right here is going to be at a length of 50. The second one would be at a length of 100. The third one would be at a length of 150. These are the 3 lengths I am going to use with this strategy: 50, 100, and 150. The next step is to go over to the style right here. The colors I am going to use would correlate with a traffic signal. The reason why I am doing so is for you to better understand this strategy clearly. The first thing we are going to do is to change the color right here from a blue to a red. The second color, we are going to change it to yellow. So as you can see right here, red, yellow, green. These are the 3 colors we are going to use with this strategy. Once you are done, you can go ahead and click on OK. You can see that the indicator has improved. Right now, I am going to show you exactly how you can use this indicator to help you when scalping. We are going to start off in this section right here. In the beginning of this video, I told you that this is a 2 confirmation scalping strategy. And since we are using 3 different exponential moving averages, that means there is going to be 2 crossovers before you can enter a position. In an example of an uptrend, you can see clearly here that the price was trading below all these exponential moving averages, and at this exact level, the price went in the upward direction. The green line crossed above the yellow line. This right here is confirmation number 1. Confirmation number 2 is when the green line crossed above the red line. You can see right here, this shows that there was an imminent change in trend from a downtrend to an uptrend. You should keep in mind that there is going to be an invalidation to this strategy, and I am going to show you exactly how to identify that when using the Williams Alligator. These 2 confirmations shows you that you can enter a long position when this price touches the green exponential moving average. There is something you need to understand. In an uptrend, the EMA tends to act as support, and in a downtrend, it tends to act as resistance. So you can see clearly here that the price was supported by the exponential moving average. This acted as support at this level and also acted as support at this second level. So you can basically enter your positions at any of these 2 levels, as long as there is a confirmed support by the exponential moving average. You can see that soon after, the price tends to go in the upward direction, and the exponential moving average would tend to act as support. Pay attention to what I am about to say. When using the Williams Alligator, you can see that I have correlated these exponential moving averages with the traffic signal, and let me show you exactly what it means. This yellow exponential moving average should be taken as a neutral point. When the price is above the green exponential moving average, then this is a strong uptrend. At this particular level, if the price breaks this green exponential moving average, there is still potential for a price support at the red exponential moving average. And this red EMA is the last line of support. This right here is telling you that you should be careful and you can possibly take some profits in your long position. You can see that this acted as support. It was tested over and over again. The support held and the price continued in an upward direction. Now let me show you an example of a downtrend using this strategy. This right here is an example of a downtrend using the Williams Alligator. You can see that the price went from above the exponential moving averages to below the 3 exponential moving averages. So at this particular point is a confirmed downtrend using this strategy. And as you can see, the price continues to go lower in the nearest future. In a downtrend, like I told you, these exponential moving averages tend to act as resistance, while in an uptrend, it tends to act as support. So you can see right here, resistance, and as long as the price is closing candles below this red exponential moving average, then it is still a confirmed downtrend. You can see right here, the price will continue to go lower in the nearest future. Right now, let me show you how to identify a potential fake out in this strategy. If I go forward in price, you can see clearly here that the price went above this red exponential moving average. This right here is an invalidation to this strategy, and you can easily exit your short position at this exact level. But if you look closely, since this is a 2 confirmation strategy, there was only confirmation number 1, where the green EMA crossed above the yellow EMA. You can see that at this particular point, there was no crossover with the green and red EMA. So this confirmation number 2 wasn't present. And when you see this kind of price action, this is considered a fake out. If you go forward in price, you would see that it continues in a downtrend after these massive fake outs. So this is basically how to use this strategy in an uptrend and a downtrend to enter a long or a short position. Before I end this video, let me show you an invalidation to this strategy. Sometimes you may get this kind of price action where there is a 2 confirmation to this strategy and soon after there was an invalidation to this strategy. The best way you can trade this is when you are to enter a position right here, your stop loss is going to be at the previous candlestick low at this particular level, so that if the price breaks below these 3 exponential moving averages, then you would get stopped out at this level with a minimum loss. You can see right here at the previous candlestick low, this is where you should set your stop loss when entering a position in case the trade goes against you, just as this exact price action. You should know that no strategy is 100% guaranteed. There is always going to be fake outs when using any strategy. That's why it is important for you to use a stop loss in every trade. I truly hope you've enjoyed this content, and if you did, you can please leave a thumbs up and try subscribe to the channel. Right now, this is going to be it for this video, and I will see you in the next video. Goodbye.